Thank you. So, hi everybody. My name's Deanna Clark, and I'd like to welcome you to our town hall today. Our webinar is with Peter Ryan, Goba Capital. He's the managing director of business development there, and we're here today to talk about trade financing strategies, leveraging assets for business growth. And I want to just share an agenda with you for how today's program will roll out. And we're going to start with our welcome, and we'll continue with introductions, go on to my interview of him. We have a little bonus for everyone attending today, which I'll share with you at the end. And then we'll have time for questions and answers. All right. So first, I'd like to start by introducing Peter and Goba Capital. He brings decades of experience to private credit, business development, commercial strategy, and he does this across the OECD plus countries and emerging market jurisdictions. With a 17-year tenure as an owner and operator of a niche U.S. energy trading business, Peter has cultivated an extensive domestic and international network, connecting private capital to alternative investment opportunities. Peter specializes in private credit, particularly in the opportunistic and non-bank financing space, working closely with family offices, hedge funds, and private equity firms. His expertise spans origination, structuring, and execution of complex transactions with a strong focus on commodities, trade finance, and cross-border deals. With 3 decades of global experience, Peter excels in identifying and securing lucrative investment opportunities, leveraging his deep industry relationships and strategic insights to deliver tailored capital solutions. I couldn't be happier to have Peter with us today. Just a little bit about our law firm, Clark-Esposito law firm. We're New York City based, and we help companies who are importing and exporting, so who are buying and selling goods from other countries. We help them with regulatory compliance issues involving specific agencies, be it U.S. Customs related to importing, that with Office of Foreign Assets Control, sanctions, they're otherwise known as OFAC, along with export controls with BIS. And we have an extensive collection of educational videos on our YouTube channel, Clark-Esposito Law Firm. Here's some examples right here. And in light of all of the tariff talks with the current administration's change in trade policies, we've actually just launched a couple of tariff-related programs, one to help companies verify they're using the right tariff numbers, along with one to see if there's any way to enhance the numbers and therefore save some money. So without further ado, I'd like to ask Peter, can you go ahead and set the stage for us for leveraging assets for trade finance growth and how asset-backed trade finance works?
Yes, yeah, and thank you for that very generous introduction, Dan. It's a pleasure to be here. Goba Capital, we enjoy working with partners like Clark-Esposito law firms, big accounting firms, advisors, very important in terms of referrals for new business that I'm responsible for originating. Trade finance, it's a very specialized, somewhat esoteric sector. We at Goba Capital, being a privately held investor, are able to, in some circumstances, complement banks that are supporting our clients. The typical profile would be an exporter, importer, trader, a merchant moving goods from one destination, typically where there's a surplus, to another where there's a deficit. We're able to structure the finance so that we focus really on the trade flow, all the way from procurement, that could be pre-export, pre-shipment, to when the goods are actually in transit. It could be on a vessel, on a rail car, all the way through to when those goods are sold and invoices generated and there's an account receivable to be financed. So we're looking at the flow of the goods and the cash and using those current assets to secure the obligation, as opposed to general business lending, where we would look at the credit worthiness or the credit score of the actual borrower. So we're tying the capital to the actual flow of goods, to the trade, to the transaction.
Okay. And in terms of, using tangible assets as collateral, can you talk a little bit about that?
Yes, so that would be, for example, inventory, which tends to make up the corpus of the financing in any transaction. That's so acquiring that inventory at, let's say it's at a mine or at an agricultural site, a location, a farm, paying for those goods, paying a supplier, and then taking as a funder, financier, taking a security interest in that inventory. We could do it on that lien-based structure, or we could take title to the inventory, and we could do what's known commonly as a repurchase agreement or a repo structure. So we've got if there's a default, if anything goes wrong in the transaction, we're able to seize the goods and auction those off, sell that inventory. If we own them, then it makes it a much less risky proposition. Once the inventory is converted into a receivable, then we can finance those instruments as well. So we can advance against those receivables, and that obligation would be retired when the end buyer, the purchaser, pays into typically a bank account over which we have control. A mechanism known as in the United States as deposit account control agreement. So we're looking at the actual goods themselves, the inventory and the receivables, as our source of collateral in case something were to go wrong.
That makes sense. Well, could you explain some of the primary applications related to facilitating international trade and improving cash flow and risk mitigation?
Absolutely. So trade finance comes into play. I think the greatest advantage is when buyers and sellers are entering into a new relationship. So there's no history between the two, no trust foundation. Trade finance, we can supply an import letter of credit. So that's a structure whereby the goods will only be paid for if they conform to the specifications, the quality specifications, the quantity specifications in the contract. So we will finance the issue of that LC. The LC will, the proceeds will be paid once the goods are delivered. So we're eliminating the performance risk. It could be outright fraud. The goods never get to the destination or to the transportation mode. Let's say that's on a vessel, or they do arrive, but they're non-conforming, the quantities of or the qualities of. So that's the international trade side, the procurement, transportation, delivery of the commodity across borders. Can be different geographies coming out of Asia going into Europe or West Africa, a lot of soft goods, coffee, cocoa going into different markets. The second major advantage is improving cash flow. So you're shortening that cash conversion cycle. You're injecting that liquidity. So either paying for the goods earlier or extending the receivable. So shortening that cash conversion cycle improves the liquidity profile for these typically small and medium-sized privately held companies that we're dealing with. Risk mitigation, so that goes back to non-performance, non-payment primarily, but import letters of credit, again, very important in international trade. So if there's a currency fluctuation or there's an export issue, again, with the letter of credit, it will only kick in once the goods are actually made available on the FOB point or on the actual vessel. By heavily structuring the transactions and surveilling and monitoring the flow of the goods and the cash, we're very operationally intensive. We're able to de-risk the transaction and ensure that if there is a default, we know where the inventory is, we can seize it, and we know where the cash is, we have control over it.
Wow. Well, it does sound operationally intensive for sure. Well, can you tell us about some key advantages to having asset-backed trade financing and who benefits from this?
Yeah, absolutely. It a lot of it has to do. The advantages are the primary advantages. The flexibility in the structuring. So if you walk into your local community bank or even a Main Street bank, you're going to be typically evaluated on the creditworthiness of the company. Oftentimes, we're dealing with either early stage companies that don't qualify, they're not advanced enough up the maturity curve for a traditional bank to consider, or they may be too thinly capitalized. They may be involved in commodities where banks typically shy away because commodities, as you've touched on, right now, very thematic in the commodity space, the impact of tariffs and the uncertainty that that's causing. Also, the threat in the US of port fees between $500,000 and $1 million for any vessel arriving or departing a US port that has Chinese nexus. That's pretty much every vessel on the water.
Right.
And considering that international trade accounts for about 70% of the movement of all goods worldwide, it could have a devastating impact on the financial condition of some of these smaller companies that we deal with. So we are able to step in and support them where banks may not. We're also able to look at a company that has an opportunity to increase its volumes, a large contract, maybe a new supplier, a new customer. We can consider that, whereas again, traditional banks may not be so keen to support that.
Mhm.
I think it's probably helpful to give a couple of examples of companies that we have helped out in the past.
Sure.
One, an exporter of transportation fuels from the state of Texas into the northern Mexico market. That was an owner of a fleet of rail cars. They had some relationships in the fuel space, but they weren't a pure petroleum products operator. Their advantage was in bringing that fleet of rail cars and being able to transport the goods in an economical fashion and beat the competition. So we struck an agreement with them. We would pay for the fuel as it was loaded on the barges at ExxonMobil's refinery in Corpus Christi. We'd finance the material in transit down to a very large storage facility on the border of Brownsville, Texas. And then the Mexican buyers were able to come up and utilize those rail cars to take the material through to destination. That's a fairly complex fact pattern that a traditional community bank or a small bank in the United States is probably going to find hard to accommodate.
They
Another
don't want to
was
touch it.
yeah. And another was a critical mineral producer, a group of Australian mining engineers that came to the United States and were able to scoop up a very valuable asset and export metallurgical coal to two very large steel makers in Europe. And they were using that steel to support energy transition, specifically in the manufacturing of electric vehicles and wind turbines. So again, it was natural resource related, early stage company, exports, again, too hard for banks to get their minds around or too hard for banks to move quickly on. So that agility and dynamism that we can bring to the table in a conversation like this, if Deanna was a borrower and we were evaluating an opportunity, we could get to a term sheet within a matter of days. Our risk and underwriting team could diligence out the opportunity and get a package before our credit committee for approval within 2, 3, 4 weeks. So from an initial conversation to underwriting, credit decision, and then documentation, a company could have its capital within 6 to 8 weeks. We move very, very quickly compared to traditional lenders.
Yeah, I would say so. And so even, just from your description, I'm looking at who's benefiting. I mean, there's actually several other parties in addition to who's on this slide who benefit, not only from your timeframes, but really this agility. It's okay, it's heading to Brownsville. Even if there were other delays, it sounds or weather related, for example. It's because you're so operationally intensive, you guys can really sort of come in and help manage things. Is that
Yeah,
accurate?
I think that's an accurate characterization. So I think also we leverage our deep knowledge and understanding of this niche that we're involved in. So again, if we're in the relationship business, we like to build long-term relationships. And we understand in the real world things can and will go wrong. You mentioned a big factor in any shipment can be weather related. It could be occasionally sanctions can pop up. We saw that in 2022, the invasion of the Ukraine. It could be what we're seeing here with these port fees. There can be all sorts of reasons for interruptions in the flow. We have a conversation with the management. We're very close to our customers, and we can show some tolerance in terms of forgiveness, modifying some of the covenants to give them that flexibility. And there you have it, importers, exporters, manufacturers, distributors. The counterparties are varied, but somewhere they're in that supply chain, all the way from where the goods are manufactured, or they come off a tree, or out of the ground, or out
Yeah,
of a petroleum refinery, and they're being transported all the way through to downstream to the end user.
absolutely. So can you tell us about trade and commodity finance applications?
So, giving some of the examples you have there, letters of credit, very important and commonly used, again, where counterparties really don't have an operating history. So pre-shipment, letter of credit, once the shipment has occurred and an invoice is being generated, then receivables, purchasing or factoring, very established market, something we're very good at. So we'll come in we'll liberate the capital tied up in those invoices by purchasing them from our client. And then we'll structure it so that when the obligation is retired, that their customer pays that, it goes into a bank account that we have control over. And we take what's owed us and we revert the balance to our customer.
Mhm. And you've shared a little bit just a minute ago about how you differ in terms of flexibility and speed compared to traditional banks. Can you share a bit about what industries Goba Capital primarily serves, or if there's any specific geographic limitations?
Yeah, I would say what we don't get involved in are clearly anything that's sanctioned. Almost every other lawful activity that we can understand, with the exception, we're not fans at all, I should say, of cannabis. Geographies that we know very well, North America, I include Canada, Mexico, certain parts of Latin America, Asia Pacific, we have some very large accounts in Australia. Rule of law, almost any legal regime where rule of law prevails and we can be confident in a liquidation scenario or an enforcement scenario that
Yeah,
we have a very solid basis for recovering, then we can look at it.
got it. And in terms of borrowing process, can you talk a bit about, what documents or financial information a new borrower would need to provide when applying, or how you might evaluate the creditworthiness of an applicant?
Yes, yeah. So there, I think we're as prudent and as diligent as any lender. Certainly, the depth of our credit and risk department, all veteran ex-bankers, very highly trained professionals. So we're looking at the quality of the information we receive. Now what differentiates us, we don't require top four auditors to have audited accounts. We can look at reviewed or company prepared accounts. We do dig deep into the veracity of the information, making sure that we're getting legitimate bona fide documents, authenticating those. So AML, onboarding, KYC, the same sort of treatment that we would apply to a prospect that any traditional lender would do. And then we're looking also at if the flow of goods are involved, then we're going to look operationally. Okay, is this a legitimate fact pattern? We want to understand all the counterparties involved in the supply chain. We look at those purchase and sale contracts. those quality and quantity documents that are prepared by independent inspectors. We're doing the whole full gamut of underwriting and due diligence.
Okay. And talking about risk mitigation and loan terms, are there, certain risk mitigation strategies that Goba Capital uses to secure loans? And if you could also share what the typical repayment terms might look like.
Yeah. So again, focusing here on the trade side, we're going to take two ways we can do it. Lien based, so we'll take a security interest in the goods themselves and receivables.
Mhm.
We might take assignment of the purchase and sale contracts. If it's a repo, then we've actually stepped into the supply chain and taken possession of the goods, and then we'd resell them at a later date. We don't do a lot of that, but we are able to do that.
Mhm.
Repayment terms, most of our facilities are structured they have a revolving nature. So we're looking at cycles from paying for goods, transportation, collection of receivable proceeds, anywhere between 90, maybe 120 days. The tenor of our agreements with our clients, those credit facility agreements, anywhere between 1 and 3 years. So interest rates, there's a premium that we charge because we are in the private sector. We are looking at those companies that where we're either complementing existing bank lines or we are their sole source of capital. They're coming to us for either funding security or funding diversity. So we are all in. Our pricing is what you would expect it to be, competitively low to mid-teens all in. That's where the hammer falls on pricing.
And is there ever a situation where you might offer an unsecured loan, or under any particular conditions?
We do have some precedent for that. Typically for us, those are what we consider very, very large credit-worthy customers. By that, to give you some color on that, probably over $1 billion in sale and top line revenue, several hundred million in net equity, and very robust financial condition. We don't do it often, but yes, we are able to consider that.
Okay. So turning now, I see we've got about 5 more minutes. So I want to talk a little bit about support for borrowers. Does Goba Capital provide support or guidance to borrowers on structuring their trade deals to maximize financing options?
So we can do, I mean, my own background, my subspecialty is in moving bulk liquid products. So that example I gave you before of the exporter shipping diesel and gasoline into northern Mexico, we went down there. I went down with my boss, the principal here, and we inspected the tanks and all the rail cars at that facility in Brownsville, Texas. I knew what I was looking at. I have used that type of equipment before. We don't get paid for that, but we can give our input where we do have the knowledge and expertise. So, for example, I'm not a coffee, cocoa, or sugar expert, but we do have partnerships. Just for example, yourselves, if we had a sanctions related issue, we could turn to you. We'll turn to a qualified professional who has the expertise and the track record. And yes, we can lend that knowledge, if you like, or make those connections to our prospects and our customers.
Okay. Well, one last question I'd like to ask, how is it that Goba Capital handles complex trade scenarios such as multi-jurisdictional transactions or high-value commodities?
I think historically that it goes back to the principles involved, and we all between us have been brought up in this environment. International trade, cross-border transactions. It's a niche that we feel very comfortable and confident in, and we play to our strengths. That just happens to be what we're very good at.
Terrific. One thing for everybody attending, we wanted to offer all of you a bonus for attending today, which is our tip sheet, 10 essential tips for navigating trade finance solutions. So that will be made available to all of you. And of course, where any of you would like to be in touch with Peter, he can be reached. Here is his information, peter@gobacapital.com. And his phone is 917-770-6203. Peter, I'd like to thank you for joining us. Of course, anybody has questions for our firm, we can also be reached via email at contact@clark-esposito law.com or at our office 917-546-6997. I think at this point, what I'd like to do is I'd like to go ahead and open it up to any questions if there are any. Gina, can you let us know if there are any?
Absolutely. There are none in the chat currently. If you'd like, I can allow them to unmute themselves if they'd like to just ask you.
I think we can give a moment. Peter, would that be all right with you?
Sure, absolutely.
Okay. If anybody has a question, you're free to come on and ask.
Looks like we have a very satisfied audience.
Yes. All right. Well, again, everyone, thanks for joining us for today's town hall. Thank you, Peter, for being my guest today.
Pleasure.
And
thank you, Deanna.
we will look forward to seeing all of you soon. Thank you. Take care.
Thank you all. Have a great day.
Thanks.
Bye-bye.
Bye-bye.
Subscribe and click the bell icon so you'll be the first to know when we upload a new video. Check out our playlist if you want to see more of our videos, and comment below and introduce yourself. We'll see you soon.